Okay, to continue our discussion with the recording process, let's now proceed to the topic on what is a ledger. Again, this is part of a series of accounting principles tutorial, and I have posted the links on the description below so that you can follow the topics that I discussed. Okay, so in accounting, a ledger is the collective term for the entire group of accounts maintained by a company. So it includes all the asset accounts, all the liability accounts, and all the owner's equity accounts. So that is what we call a general ledger. It keeps the information about changes in specific account balances. So the general ledger, as what I have said, is that every company has it, and it contains all the assets, liabilities, and owner's equity accounts. So how does a general ledger looks like? So a general ledger has three categories of accounts. You have the individual asset accounts, and here is where your equipment, land, supplies, cash are in. And you have your individual liabilities accounts. You have your interest payable, salaries payable, accounts payable, and notes payable. And also individual owner's equity account. You have salaries expense, fees earned, you have your drawings account, and capital. So the ledger should be arranged in a statement beginning with balance sheet accounts. So although we have not yet discussed about balance sheet, but balance sheet has your assets, liabilities, and owner's equity accounts. So the accounting equation accounts are in your balance sheet accounts. And the order should be asset accounts, liability accounts, owner's equity accounts, starting from capital, drawings, revenue, and expenses. And each account is numbered for easier identification, which provides balances in various accounts. So again, it's different from journalizing. Why? Because the journal is what we call the book of original entry, wherein all the transactions are being recorded. Now here, in ledger, you have to transfer the journal information to your ledger account. So meaning, you have an individual account for your cash, for your liability accounts payable. So let's look at an example here. For cash, it summarizes all your transactions with cash. So you have the dates where that cash is being transacted, and all the increase and decrease in cash are recorded here in that ledger for cash. It's actually just the T account, but here we post it here in the ledger. So it shows the balance. So this final balance is your final balance for your cash. Okay? Now, the process of transferring this journal information to your ledger accounts is what we call posting. So the phase of the recording process that accumulates the effects of journalized transactions in the individual accounts is what we call posting. So let me show you the key steps in posting. So later on I will give you some examples, but first you need to learn that when you do posting to debit account, first you have to input the date, the journal page where that transaction was extracted, then the number, then the amount. So after that, you have to enter the debit account number in the journal reference column. Then you have to post. If you're going to do posting to credit account, the same thing that you're going to do, you have to post the date and the journal page where you get that information and the amount. And then this time we are going to put the account number of your cash, let's say for example, in the journal reference column. Please recall my previous video that we have to leave the reference column of the journal. Why? Because we are going to make use of that column after we have transferred the journal information to the ledger. So now is the time that you can make use of that column by entering the account number of that specific account. Okay, so posting should be performed in chronological order, meaning all the debits and credits of one journal entry should be posted before proceeding to the next journal entry. And you can't proceed to the next journal entry without finishing the first transactions. What about the reference column in the journal? As what I have said, the numbers in this column indicate the entries that have been posted. So meaning after you have entered into the ledger that particular journal information, get the account number of that particular asset or liability or owner's equity account, and then write it in the reference column. So what to do with the reference column in the ledger? Again, in my previous example, it indicates the journal page from which the transaction have been posted. Now, a while ago I have mentioned about chart of accounts, right? So a chart of accounts actually lists the account and account numbers which identify their location in the ledger. So the numbering system starts with the balance sheet accounts, as what I have shown you a while ago, then the income statement accounts. So we'll do some examples for this posting. Okay? First transaction. So this is a new transaction so that we can be refreshed because we have already learned the basics a while ago, right? So here on October 1, Catherine T. Pania invests 10,000 cash in an advertising venture to be known as Pioneer Advertising Agency. So here we have to do two analyses. The basic analysis, meaning what are the accounts affected, asset or equity, something like that, and debit and credit analysis of these accounts affected. Okay, so let's start with the basic analysis. What is our basic analysis here? So in every transaction, especially in accounting, every first transaction, it involves asset, cash, and owner's equity capital. So what happened to them? They both increased. So we go now directly because I have already discussed this in my previous video. And if you are still confused, you can see the link in the description below to look at those previous topics that I have discussed. It will help you. Now, let's go to the debit and credit analysis. So take note that your asset cash increased. So what is the normal balance for cash? So remember, it's debit. So you have to debit cash, and if you debit cash, then the other must be credit. So your capital must be credit. Okay? Now, let's look at the journal entry. Okay, this is how it looks like in the journal. So in the journal entry, you have your date, then you have the debit account, and you have your capital account. 10,000 for debit and 10,000 for credit. Your explanation is invested cash in the business. Now look at the T account. We have a T account for cash and a T account for capital. So for cash, you have your debit entry here, dated October 1. And for capital, you have your credit entry here, dated October 1 also. Now you might see, what is this one? What is this for? 40. This one are the account number that can be seen in the ledger account. So this is a simplified view of posting. The real posting happens on the ledger account. So you have your cash debit 10,000. Where does it came from? From journal page 1. And your balance is 10,000. For capital account, you have credit and just copy for the balance. Okay? So now, since you have already posted it into your ledger, now you can go back to your journal and put this account number to the journal reference column. So if you can see that my example a while ago, you have your reference column being filled up with 1, which is the account number for cash, and capital 40, which is its account number. Now let's proceed with our second example. Taas man ni. Dapat dahil separate din ako. So on the next video, I'll show you example on doing transaction analysis, then applying the debit and credit procedures, journalizing, and then posting it into the journal.